right. Welcome, everybody, and excited to see you all here today for this webinar on institutional adoption and how we're going to really make it in this space when it comes to institutes and their money and TradFi and DeFi and the whole topic. Tonight, we're going to be covering the exciting world of cryptocurrencies, but not just that. We're also going to be talking about the impact that crypto and this space will have on the institutional side of things. Our speakers are going to be sharing some really valuable insights on the evolving landscape of digital assets, which doesn't just cover tokens, but real world assets, which covers liquid staking, which covers derivatives, options, a whole range of different things, some of the challenges, some of the opportunities that they present for financial institutions. And we'll also touch on some of the strategies that some of these institutions employ to navigate this dynamic market. And we'll be discovering a little bit around how these institutions, when they come into the space, how they leverage crypto assets to really enhance their financial strategies and stay at the forefront of innovation in the ever-changing financial ecosystem that is the Web3 space. So in this session, we're going to cover a few different topics. And some of those topics that we're going to cover will be institutional crypto and market trends and some of the sentiments around that, some of the strategies and opportunities that these institutions take, like I mentioned, the yield generations for these institutions, which is a little bit different to some of the yield generation opportunities for the retail customers, some of the custody solutions and the regulatory compliance that surrounds those. And then at the end, we'll have a Q&A session where we'll be taking some questions from the audience and asking them to our panel speakers. If you do have any questions throughout, please feel free to add them in the comments section, and we'll select some of them to ask at the end. So without further ado, I would like to introduce our panelists for tonight. And if we can bring up Zhuling Chen, who is the CEO and founder of RockX. We also have Tim Tan, Head of Sales and Marketing at Cactus Custody. And we have Lionel Koh, who is Head of Business Development at QCP Capital. Welcome, guys, and thank you very much for joining.
Thanks for
having me.
To start with,
hello everyone.
Before we get straight into the questions, I'm just going to ask for a brief introduction from each of you guys. And the one thing that I will say that you need to include is your favorite food, if I can. So we'll start with Zhuling, then we'll head to Tim, and then finish up with Lionel. Please introduce yourself to our audience.
Okay, hi everyone. Thank you for spending the time with us this morning or this afternoon or this evening. So my name is Zhuling Chen. So I've been in this space for the past 6 years. Always see myself more as a practitioner, right? So not really investing or trading myself, but more looking at this whole space as the new financial system, as well as a new internet. So this is why I co-founded RockX to help builders to connect onto blockchain and also help institutions to generate a crypto native yield through a non-custodial way. So that is the staking business that we've been doing for the past 4 years and have been working with folks like Cactus Custody and also QCP Capital. So prior to crypto, I was a strategy consultant at Roland Berger, mostly covering financial services and also telecommunication across Southeast Asia. So that experience did bring me to a realization that technology plus financial service is something that can make this whole industry more exciting and also more efficient and probably ideally more inclusive.
Yep. Right, thank you. And Tim?
Hi everyone, and thanks for inviting me onto the webinar. Right, I'm Timothy. I lead sales and marketing for Cactus Custody. Just want to spend a few minutes on Cactus Custody itself. Cactus Custody, we are the institutional arm of the Matrix Port Group. We operate under a Hong Kong trust company with a TCSP license in Hong Kong as a full regulated custodian. We are SOC 2 Type 1 audited by Deloitte. We have $50 million worth of insurance via 1 Degree, reinsured by Arch, which is a Lloyd's of London syndicate. And yeah, today we started in 2019. Today we custody assets for over 300 institutions and for over $3 billion, right? Not forgetting the request that Gandalf mentioned at the start, right? My favorite food, right? Being in Singapore, I tend to be spoiled for choice, right? But I really like Japanese food, right? Just came back from Japan, 2-week holiday in Japan. So yeah, sushi and the likes, whatever you can think of. That's what I would prefer to eat. Yeah.
Sushi is definitely a great food. I would definitely put that high up on my list as well. And Julian, don't think you're out of the question I'll ask you at the end of this. Lionel, please.
Thanks so much for the introduction, Gandalf. So just a bit about myself. I'm Lionel. I head up business development here at QCP Capital. I've been with the firm for coming very close to 2 years already. Prior to that, I've spent about 7 years in the banking space, both in the local commercial banking space and also in the wealth management piece. So after that stint in the banking space, I wanted to hop over and, to the other side and see how the crypto space is evolving, and definitely couldn't say no to that. Haven't looked back since. Quick touch on QCP Capital. We've been around since 2017. We are one of the first few trading firms here in Singapore who have been through a couple of cycles now. I think we've really established our name as primary option market makers, which is what is our bread and butter. So we are streaming prices, making prices across all the major trading venues. Working with crypto institutional and also traditional finance institutions through the crypto options market. We also do run a 24/7 OTC desk, who also helps quite a variety of clients, whether or not they are accredited investors or whether they're miners, crypto native hedge funds, traditional macro hedge funds. The works, whether or not it's through stables, spot trading, or generating yield, or trying to hedge their positions through options again. That's a little bit about us. We also do some venture investing as well, or maybe a bit more than that. We've got about 70 portfolio companies under our belt, and that's something that we still look at as well. Onto the interesting food topic. I'm a pasta guy, so I can't say no to a good plate of carbonara.
Ooh, carbonara. Didn't expect that, but not a bad choice. And
all about
Julian, you got to top that. Yeah, that's it. Carbonara. We've got sushi. What next, Zhuling?
Yeah. So I'm more of a guy looking for spicy food. So I particularly love Sichuan food, right? So with a bit of spikiness and peppery. So that's what I usually go for.
Yep. I remember when I came to Singapore with the team a while back, and I can't handle spice at all, and we went for a lunch at it was some sort of hot pot place, and there was this spicy crab dish. Julian, it was an amazing place, and this crab dish was so good. It's the only spicy food I've ever willingly eaten, and had more because it was just amazing. So I can definitely testament that Singapore has some very nice food, even the spicy food too. But for me, my favorite food would have to be seafood for sure. All right, now that we've got the important stuff out of the way, the favorite foods, let's get into the topics for tonight. To start with, let's look at it in a bit more of a macro scale. So just taking the market as a whole, I mean, it's been really active the last few weeks, and especially the last, 24 hours with the news that's been going on. But looking at it a little bit more macroly, so the last 6 months, 12 months, I'm going to open this up to the floor. You guys give us an idea of what sort of current trends are you guys seeing from an institutional perspective, and how would you define the market sentiment currently?
Yeah, maybe
I can go first.
Oh yeah, please, Lionel, please go ahead.
Okay, thank you. So I think right off the bat, 3 things come to my mind. Like what you said, the past few days and weeks have been pretty interesting. Not talking about any major events, but let's just look at some activity in the market overall. Seems like we had a little bit, or we're entering a little bit of a mini alt season. in the retail market. So Sol and Link, and these are price actions which are tokens rather, which have seen some pretty interesting price actions so far. Narratives wise, on within that ecosystem, AI and gaming, things like that are still prevalent as well. So I think overall it does look like the market is yearning for the next big narrative, and I think that's generally quite bullish. But everything is still going to be piggybacked of the spot ETF. I think that's where most eyes, both retail and institutions, are eyeing in. That the BTC, of course, up till maybe a week and a half ago, the ETH spot as well. That's something that's quite interesting. And of course, you have major names in this pool of people trying to file, and the big boy there for sure is going to be BlackRock as well. They have a pretty good track record in terms of getting their ETFs listed. I think a 575 to 1 success rate, not too bad if I say so myself. That's the only one which failed back in 2014. And then fun fact, that was also because it was a non-transparent ETF, whereby it was a bit more geared towards managers not having to give information about their assets and earnings. So it's not really the same thing there, right? Lastly, I think what we see as well on our side is stablecoin adoption. Increasingly noticing non-Web 2, non-Web 3 companies adopting stablecoin usage just for their day-to-day transactions. These could be wholesale trading companies who maybe the suppliers need some, want to receive payments in stablecoins as well as an alternative. So that's generally quite a healthy uptick, in my opinion.
Just adding on to Lionel's point, right? And I especially resonate with the part where he's mentioning about adoption by non-crypto native companies. Here at Cactus as well, seeing increasingly, especially this year, more and more of these companies coming on board, opening up a custody account, using it just like they would in the traditional sense, a bank account, right? So not just wholesale traders, right? Even advertisers, marketers who need to make small payments to their influencer marketers overseas are migrating towards crypto and adopting it as a payment tool, right? In addition to that, right, I think as we look at the current trends, I think most of us would agree that the industry is cautiously optimistic moving into next year. Bitcoin ETF is a big narrative, improving macroeconomic conditions, so on and so forth. You get the drift, right? But really looking at 2023 as a whole and what has happened this year, I would really classify this year as a sort of a recovery year. Where many institutions were forced to reinvent themselves as a result of what happened during 2022 and the earlier part of 2023. Right? So we saw a lot of institutions redesigning and reintroducing new products, focusing on mitigating counterparty risk, improving transparency, even right-sizing and restructuring of organizations that we have seen throughout this year from many of the top crypto institutions as well. And it extends beyond that, right? This year we spent a lot of time re-establishing banking rails as well as a company, as an industry, and yeah, I think that the amount of hard work that has been put in this year makes all of us it puts all of us in a better position or in a good position to kind of capitalize on next year improving conditions, right? As we all widely expect.
Absolutely.
Yeah, just to add on to Tim's point, this year is clearly a recovery year. I would also say this is a year more about us soul searching, right? Because the past 2 years after the DeFi summer and its crash, and also a lot of centralized institutions kind of like bankrupt, right? So people are thinking about two things, right? Number one is, okay, what type of security methods or regulations are required in this whole space in order to make it sustainable? And the second part is about, okay, what is actually a meaningful and sustainable yield in this whole space? A APY of 200% is definitely not something that we're going to see forever, right? Now people are thinking, 5% is pretty decent. So based on this, right, we've seen, a lot of we see that institutions are waiting for regulations to clear out, particularly in US, And so far, recently we start to see a bit more of clarity, and also comes with settlement in US. We think that is gonna make a lot of institutions feel like this is more they're more ready to come in. Yeah. In Asia, particularly, I think people are also looking at, okay, so crypto is not just about trading profit, right? So there are other types of opportunities. So staking is one. Historically, Asia has always been focusing on trading, but now we start to see more appetite of companies to start to engage with staking. And of course, they usually prefer a third-party custody for better security of their assets. So this is what we've been seeing in the market. And we also start to see more of a separation between Bitcoin as a digital gold, whereas the other tokens, Ethereum and anything else, they're more like an internet business, right? So people are more betting on what is the ecosystem, what is the use case built on top of that. Yeah, and this kind of also indicates, why there has been a mini bull run for the past few weeks.
Absolutely, and there's each of you have come at it in a slightly different angle and bring really good points. The first thing that I want to touch on is Lionel, you mentioned about the Bitcoin ETF and more recently the Ethereum ETFs. Can you just explain just very briefly why that is them being approved is why that's so impactful for the industry?
Yeah, I think a few things there. Number one, we're talking about, through a spot ETF, you're actually holding the underlying itself, right? It opens up doors to people who previously might not have had that access. Maybe they weren't, able to create accounts on exchanges. They didn't have the rails to get access and buy the actual tokens itself. This does open up that. This also opens up it. This also opens it up to, let's say, banks potentially even offering this to their clientele as well in a regulated format, right? So all these things come in, increase liquidity. There's more clarity, of course, because it's through an ETF, and there are certain rules and regulations that they need to abide by if they want to stay there. And all that, I think, just helps to foster, and it helps us in the option space as well, right? It's more liquidity as a whole, more interest coming in, and of course, people then subsequently need to hedge their positions, or they want to participate in a little bit more of a directional play, and that's where we come in to help serve the market as well.
Yep. Yeah, absolutely. That makes perfect sense to me, and hopefully to the audience as well. Tim, something that you kind of touched on a couple of times was around the institutions coming into the space, and they historically were very tentative, and they're sort of still tentative, but they're feeling a little bit more confident about dipping their toes in. What impact or what role does the institutional side of things have in the Web3 or crypto industry as a whole? The majority of people who are in this space, they see the sentiment and the impact from the retail investors flipping and changing. They see the trades from the retails, but the institutional side, it's a lot of that is behind closed doors. Can you shed some light on what role the institutional side has in this industry?
Right. Taking a more macro view on this question, right? I think institutions play an important role in any market, right? And crypto included. It gives the industry a vote of confidence. It helps institutions help to lobby for regulations. It increases trading activity, which leads to more efficient allocation of market resources to the various projects. It helps to reach a wider retail base as well. So there's a lot of economies of scale that institutional participation in a space can harvest that individual retail customers cannot, right? And that's why I think that institutional adoption is important. In terms of looking at institutional interest coming in, I think Zhuling briefly touched on this previously in his earlier statement, right? Where we are seeing a lot more clarity from a regulatory perspective, especially in Asia, right? Throughout this year, we have seen regulators giving out actual licenses or IPAs to certain companies that they think are well deserving, right? Most notably in Singapore and Hong Kong, and even Japan, right? Throughout Asia. Right, and this is really in contrast to what we are seeing in the US, where we're looking at a kind of enforcement by regulation kind of stance by the regulators, and that's why we are seeing a little bit of a shift towards Asia as well, as the next crypto hub going forward. So yeah, those would be a couple of points that I'd like to raise. Just one more thing, right? I'm sure everybody has seen the whole Binance kind of news yesterday, and really it's about, I think institutions will look at this and think that they do need to come out and they do need to be regulated and they do need to comply, right? Or they'll face quite important backlashes or quite extreme backlashes from regulators, and having increased number of institutions who are looking to get regulated and to build regulated solutions in the market will only serve to increase the amount of options that institutions have when coming into the space. And I think Marcus from Matrix Port, he's our head of research, kind of touched on this as well. He believes that this would actually drive institutional adoption forward, and it might even drive increase the chances of spot Bitcoin ETF approval going in through next year.
Absolutely. And I think had this sort of thing happened 3 years ago, we would have been seeing a very different impact on the market and the sentiment. But now, I mean, without going into prices too much, the market, the crypto market, hasn't been impacted really in any way. You could look at it and you wouldn't even notice that something like what's happened with Binance has really occurred. And everybody that I've spoken to, they've all been quite optimistic about it. It's another step forward in reality. Regulatory and compliance is not something that we should be shying away from, and not something that we should really be concerned about, but really any move towards a better regulatory landscape is going to help the industry as a whole, especially from the institutional side. Before we move on, I just want to check with Zhuling. Did you have anything that you wanted to add to either of those points?
So for us, because what we're doing at RockX is more of a crypto native business. It's about fully on-chain, non-custodial staking yield. Actually, institutional adoption is something that we are super excited about, because this brings in more audience to us, right? And also, these are the type of companies we would like to work with. Imagine, a ETF that holds a lot of ETH they can stake to generate yield. But of course, this also requires a lot of education from our side, because the institutions are so familiar with trading, with custody, with lending, etc. But usually, most of the time, they're going to ask us, okay, where does your yield come from? Like, are you lending out somewhere? Like, you're also saying that you don't touch our assets at all. So how does that actually work? So this is something that we've been constantly doing, and actually we have get to know a lot of companies that are quite knowledgeable about this, right? So they can actually get to the point. Okay, so how do you handle your private key? How do you what is the process you're doing? So this is also the part that helps us to also think about how we can enhance our security methods, not both from a technology perspective, but also from a process perspective. So we definitely think this is a great opportunity, because through the institutions, this is where the B2B2C could happen. And we like to say that, okay, basically we make every single account from a currency account to a savings account. So this is what we've been building in this whole space.
Absolutely. And so just taking on from that, I'm going to head over to you, Lionel. The idea of building out these strategies that make sense from an institutional and specifically the TradFi perspective, can you help us understand what some of those strategies or some of those best practices are, and maybe touching on the long-term holdings or yield generation or just the concept of risk management, because that's going to be very, very different when we're talking about institutions.
Yeah, I think, to be honest, nothing has really changed. Just because we are dealing in digital assets, it doesn't not suddenly mean that, okay, all your risk management values, all those things you would hold to heart are suddenly out of the door, right? Those are very, very, very transferable from the traditional world and over onto the digital asset world. I think knowing what you're after, that's something which you need to firstly understand, right? Risk reward. Zhuling mentioned 200% APY. That doesn't really exist too often, especially not in the traditional finance world. Understanding where you need to go. Institutions, normally we're talking about larger ticket sizes. And you also need to bear in mind that you probably have a fair share of fiduciary responsibilities that you need to be accountable for, right? So if you're going to be diving in head first into contributing excess liquidity into a pool, you're going to mess up the pool, but you're probably also going to mess up quite a fair bit of trust that you have with your investors and the people who have AUM with you. How do all these things tie up? So for us, again, options are a tried and tested strategy when it comes to hedging, whether or not we are talking about a stock, as an equity or an underlying, or BTC as the underlying. It still works in the same way. We're just monetizing the heightened volatility of digital assets in its own right. For us, why people come to us, we do have quite a wide range of things which we can help to offer. Simple vanilla options, the spread, strangles, flies, digital exotics, as we go slightly more down the road of sophistication. So definitely something for everyone on that front, right? It's just understanding that, okay, let's say through derivatives, can I achieve long-term holding exposure? Can I generate yield? Yes, of course you can. And also, can it help to manage my risk, right? My downside or to my upside, depending on how I'm viewed. Yes, you can do that as well. So that's why we have, really tried to double down our foothold in this space.
So, I mean, there's, like you said, there's a lot of strategies, it sounds like, and whether it's around the risk management or around the goals or the yield opportunities that these institutions are looking at, there's a lot of those that can be taken over from the traditional space into the Web3 space. But where there might be a little bit more education that's needed might be around this side of staking and specifically liquid staking, which we're seeing a big tick in an uptrend at the moment. Zhuling, being that RockX deals so predominantly in the staking and liquid staking space, can you help us understand what is this opportunity of liquid staking when it comes to institutions, and where do you see liquid staking heading in say, the next 6 to 12 months?
Mm-hmm. Yeah. So, as institutions come in, right? So, besides they just using fiat, let's say to use futures or options to have exposure on the price volatility of crypto market, we also start to see more institutions start to accumulate the physical crypto assets, so including Ethereum or Solana, Polkadot, right? Sometimes this is also in response to their clients' request, right? So because they start to have so many tokens, and now they have different options, okay, whether they want to stake to generate almost like a market risk-free yield, or if they want to do a lend out, if they want to lend out or anything. So this is where staking comes into the picture, right? So it's probably the safest yield in this market. So recently, CoinDesk, together with CoinFund, has actually made a index that is the global ETH yield curve, tracking day by day, and for all the validators out there. So actually, the whole idea here is to build something that is very similar to Libra, to guide about lending rates, and also any other types of activities, right? So we like to think what we're doing is actually kind of very similar to a fixed income for the safest manner, and in order to make this even more attractive to companies. So this is where liquid staking comes in, because we can actually make those assets tradable, and also can pair this with options to even boost the yield. It can also be used as collaterals, etc. So this is where we think that Ethereum is particularly as the second largest crypto asset by market cap, definitely and clearly it's not a security. So a lot of institutions are very comfortable of having it, right? So, and our goal and our view here is that in terms as a investment asset, they don't really need to hold native ETH, but rather they should hold some type of a liquid staking ETH, so that they can enjoy the yield from the network itself, and without compromising any liquidity in this whole setup, right? So in the market, there are a lot of liquid staking protocols. So actually, we are behind most of them as node operators. So we're the one actually running validators to generate the actual yield. But by looking at how to serve institutions, we come to a realization that almost all the liquid staking solutions do not have KYC or AML, because those were designed just for DeFi. Yeah, but what we are trying to do here is that by leveraging smart contract, so everything is fully transparent, everything is traceable, and by having a KYC and AML mechanism to allow to make sure that all the ETH coming into the protocol are vented. So in this way, we could enable institutions to enjoy that yield, but without worrying about compliance issue. So this is what we have been doing, and we've started seeing institutional customers onboarded and start to stake with us. Yeah, so we definitely see there's a big appetite in this in that front.
Yeah, I think there's a point there that I really want to flow on, and that's the concept of taking these yield offering products and ensuring that they're compliant and secure for the institutions, because they have a heightened degree, not only for themselves, but also because they are often having custody of other clients or other organizations' funds as well. So Tim, can you maybe expand on that point on how we're making sure that these offerings and we're still maximizing the yield and being competitive, but still keeping it in a secure and compliant manner?
Right. I think the regulatory piece is quite tricky to answer, right? And the reason for this is because we are dealing with multiple jurisdictions, right? And there are always nuances between regulations across jurisdictions, and sometimes even within the same country, you have different jurisdictions and different states, right? So it's quite tricky. But I think what most can agree on would be the global AML and FATF requirements that applies to all institutions that are operating across the financial sector in the world today. So the key issue behind this is the ability to identify your counterparty at the end of the other side of the trade, right? In a peer-to-peer economy, and it's something that's difficult to do. We have seen over the past couple of years permission DeFi pools that are coming into play. So I think the most famous one would be Aave Arc. We haven't seen a lot of adoption on that front. I just found out that Zhuling is coming out with a permission staking kind of liquid staking pool, and yeah, look forward to seeing how the adoption is there. But I think a key reason why some of this adoption hasn't been taking off is really concerns surrounding privacy, anonymity, right? And a lot of institutions might not want to give that up. They don't want people to know their strategy. Don't want to publish it online in public space. So maybe in part, ZK proofs of identity, right? We might solve at least part of that problem. For institutions today, to be honest, the regulatory yield, the yield environment for DeFi itself, native DeFi itself, is quite limited, right? It's limited to those that I've spoken about. and of course, native staking, I would say, would be one of the most compliant ways to generate yield at the moment, because you're receiving yield directly from the protocol, right? So that's on the regulatory front. From a security perspective, we are enabling institutions to do quite a number of things, right? So first of all, as a custodian, we keep their private key safe. If, for example, they want to spin up a node with Zhuling, Cactus Custody helps to maintain that private key and maintain that signing process on our end. Institutions don't need to worry about infrastructure, don't need to worry about losing their private keys, and that's part of security. When navigating the world of DeFi, we were one of the first launch partners together with Consensus for MetaMask Institutional, and we really spent a lot of time thinking about how we were going to make institutional DeFi safe, and to allow our customers to be able to design their risk framework in accordance to their own needs. So certain things on custody systems today, for example, whitelisting of smart contracts so that there's no human error, whitelisting, being able to set in place approval flows. These are all things that help to mitigate the operational risk that institutions are facing, right? The last thing I'd like to touch on is that there are a lot of builders out there that are building tools for institutions to understand, to measure, and to mitigate the risk of interacting with DeFi, right? So you look at things like scoring for DeFi smart contracts, warnings for potentially exploits on the DeFi ecosystem. These are things that individual builders have built. Recently, right, Consensus, which is a close partner of ours, they launched MetaMask Snaps. And MetaMask Snaps basically allows third-party builders to integrate into a wallet extension, right? So I think this would be the way that we would move forward as a custodial service provider or as a wallet service provider as well. We want to leverage on the ecosystem and builders in the space to build solutions surrounding compliance, to build solutions surrounding risk mitigation, right? And the interoperability factor between different developers will be something to look forward to as we look to mitigate these risk and security concerns. Yeah.
Interesting. And you mentioned a couple of things about how you guys are starting to evolve and adjust based on how the landscape is changing. Is there anything else that you wanted to touch on around maybe in the future on your roadmap that you are working to be flexible or agile to be able to cater to the future when it comes to that compliance landscape?
Right. I think the landscape is constantly evolving, right? What we have seen over the past couple of years, we saw high profile blowups last year. We saw FTX blowing up. So those have really increased the narrative around the need for transparency within a centralized solution. It increased the need. Regulators have come down and spoken to institutions where they put in place certain measures, right? So 90% must be kept in cold storage, 95% must be kept in cold storage in order to protect their institutional customers. Increasingly, institutions are also looking at mitigating counterparty risk. So things like off-exchange settlement solutions come to mind, and these are solutions that we are quite heavily focused on building out for institutions, right? So yeah, I think in addition to the interoperability piece, we are building internally to meet some of these institutional requirements that is not only native to them, but also requirements that regulators place upon them, right? And that's what we're doing to kind of reinvent ourselves and to evolve in this space.
That makes sense. And so now I'm going to throw it to you, Lionel. Again, focusing on this compliance landscape, how does us being more regulated and more compliant benefit institutional players? Just taking it right back to the base level, does it, for starters, let me not assume, but does it benefit the institutional players by being highly regulated and making sure that we're meeting these compliance, whether it's KYC, KYB, the AML? all of those sort of regulatory requirements? And then if it does, is there an impact on the wider space? Are we compromising by doing this?
Right. I would say yes. Reason being because when things are a little bit more clear, things are a little bit more defined from a regulatory perspective, this does bring back confidence, and there was a fair bit of confidence and trust that was lost, not too long ago. And we need that, right? We need more confidence in the ecosystem. That's going to bring in new market participants, and the larger institutions will then be comfortable to say, okay, now things are more clearly defined. People are playing by the rules in terms of what the frameworks are, and we are comfortable to then participate, put our brand name on there, be involved in some way somehow, right? And we're already seeing that. So example is, let's say, Singapore. MES has released the stablecoin framework, the regulatory framework, not too long ago. So there is a clearer distinction in terms of what are the requirements and the standards that you need to meet if you want to be able to be an MES recognized stablecoin. So I think that's a pretty positive step forward. Another interesting thing which happened not too long ago during the Singapore FinTech Festival, MES has been testing, or rather they tested an EMM pilot over there around FX institutional product transactions. That is also something which is a little bit more forthcoming in terms of trying to explore new lands in terms of how we can increase liquidity. How do we make markets which typically trade 5 days a week to become 7 days a week, 247? That is something which I think it's quite attractive across the board, right? Whether or not you're in fintech or you're a financial institution, I think all that does help to, once the lines in the sand are a little bit clearer, it's going to encourage us as well to build in a compliant way, because we want to make sure that we have business continuity as well. So I think all this, normally digital assets sometimes has a bit of a negative connotation on the flywheel. I think this is a positive flywheel, right? Where it's just going to keep spurring people to play by the books. Does that mean that, places like DeFi are suddenly going to, be wiped out just because this? No, I think things that will still have its own place. It's just a question of, in which, and again, going back to the point, like, what are you trying to achieve at the end of the day? And are you going to the right venues to, to explore those opportunities?
Yeah, and so kind of taking a different approach, Zhuling, you're coming at it from more of a building out the framework and building out the technical side of these products. Can you provide some of your input on the same question about the regulatory and compliance, how that's impacting institutional players, and are we compromising by doing something like that?
Mm-hmm. Yeah, so I think being compliant is actually a two-way effort, right? Because it's about companies trying to comply to the regulations, but also it means that the regulators need to understand what are the right questions, what are the right things to regulate, among so many, like thousands of other things they're looking at. And we have to admit that crypto industry is actually very complex, and it's a highly intertwined industry, right? Because this is not just about an asset. This is also about a new financial infrastructure. This is also about a potentially new internet infrastructure. So it comes actually with a lot of different types of regulations. And actually it's big. It comes with a lot of segments. So what we've seen a few years ago was that, regulators always think, okay, they think they need to have one regulation to regulate crypto, right? But what exactly does crypto evolves? That was not clear. I mean, this is also partially because at the very beginning, when exchanges started their operation, they basically does everything. They do OTC, they have their own, they might have their own market making teams, they have their own lending, etc., investment as well. and also sometimes they're not really using a third-party custody. But starting from probably like 2 years ago, we start to see that this industry is evolving more into everyone does their specializing their own service offering, right? So this is what we like, because this actually makes everything much more streamlined. For example, if we have clients that wants to get into this space, usually we will recommend, we have our preferred OTC players, right, in this space. So they will facilitate in a compliant way or to their best, to acquire the tokens for the clients. Then we also have the preferred custodies that can serve the clients to securely store those assets, and then we can offer the staking solution for them. I mean, this is something that Cactus and us, we have been offering the staking solution, non-custodial staking solution to the clients, right? So because the market has evolved into a more refined structure, and everyone does their own specification, we also start to see regulators to ask to have the right focus, right? Okay, so let's have one regulation on stable coins as an asset and as a payment method. They are also looking at, okay, what are the requirements for exchanges? So definitely this is heading towards the right direction. And we think that, okay, this also makes it so much easier for institutions to understand, because they know clearly what are their counterparties, and also slowly they will understand what are the risks they need to look out for.
For sure. And I mean, it's a tricky space. You mentioned about regulatory or compliance being a two-way street. And a lot of the people who are making these policies and making these regulatory frameworks, they don't live in this space. They are in a very, very different industry. And it's part of our job to educate them, as you say, because it's not just a financial product. It's not just a technological framework or an internet, the next internet. It's all of this combined in a way that the world has not seen before. There is no precedence. There is no playbook to build out these regulations, and I think we all have a bit of a hand to play in really getting to the point where we can bring the wider institutional players on board in a safe and secure manner. So I'm going to open up now to questions from the audience, and I've got a couple that have already been submitted. The first one is to you, Lionel. You've mentioned a couple of times around stablecoins being kind of key in the trends and being part of what institutions are looking at. There's been a number of stablecoins that are coming up that are using yield or LSDs, so to speak, as collateral, so that they can start to offer yield on top of them. Now, stablecoins historically are more about the stability than about generating yield. Do you see yield in stablecoins as being a future and a big product for institutions, or do you see it as something that's just a bit of a novelty and it might die off?
I think it depends on how you want to look at it. On the largely how a lot of the larger coins now are doing it, of course, there is some back-end deployment, right? Whether US Treasury bills, for example. So that is something which is pretty securely backed. And of course, it's in a mature asset class. If you're talking about in terms of LSDs, of course, which is going to be on the newer end of things, it depends. I think it's still a little bit early on to tell in terms of how widely that adoption will take place. Has it reached its max capacity? Definitely not. But in terms of will it overthrow how the older and more prominent stablecoins are entirely, and then change the way the model works? I still think it needs to be seen. But I think regardless of whether or not the stablecoin, or in which manner the stablecoin is generating that yield, I think it's important to understand what the underlying use case is and how it's going to be utilized, right? I think the value extraction that just using the stablecoin alone itself, by increasing capital efficiency, by so much, in the traditional world. I think that is something that everyone should fixate on.
Absolutely, great answer. And I hear this kind of key trend that you keep coming back to, and that's what's the use for that particular product or that offering. And I think it's it's a good question for us all to be asking ourselves, whether we're building in the space, investing in the space, or working with other players and onboarding others in the space. I think it's a question that probably isn't asked enough, to be honest. The next question from the audience is actually open to everybody on the panel. So I'm going to open it to you all. And that is crypto as a hedge. Is this something that you guys are seeing? I mean, the fiat economy at the moment is a little bit all over the place. There are a number of economies around the world, not naming any specific ones, but you look around the world and you can see that there's a lot of uncertainty between the international incidents with wars, between what's going on with national disasters, with climate change, with just everything. There's a lot of uncertainty. Do you see crypto being used by institutions as a hedge, or do you see them still not seeing it as a potential product like that?
Right.
I'll just quickly touch on that. Something pretty interesting on an institutional front. CME, right, which is one of the main trading venues in the traditional finance world. It was just a few days ago earlier this month, where they clinched number one position for BTC futures open interest. I think that's something which is pretty amazing, honestly. It does show whether or not it's a direct hedge because of other asset classes which those institutions might hold. I think we won't be able to tell for sure, but it's undeniable that the institutional interest and the way they want to participate, this is a traditional finance platform which has overtaken a lot of the major other, crypto native trading venues. I think this is something which is going to continue growing, not specific to that platform, but as a whole, as adoption picks up.
I take a slightly different lens to the word hedge, right? In terms of crypto and crypto adoption, right? So it's not just hedging from an investment tool perspective, but really hedging the banking system, having an alternative way to transact and an alternative way to make the economy to let the economy continue to run, right? We may live in very bankable cities, right? Singapore, Australia, or some of the more developed countries. But if you look across the developing nations, a lot of them don't have a reliable banking infrastructure. They may not have the most stable currencies, and a lot of them would turn to something like crypto or stable coins or the blockchain as a payment gateway to continue to live their lives with some level of normalcy, right? So I think institutions today, they look at it as an alternative payment, but effectively at the point in time, if you look at it, it actually is a hedge, right, to the traditional financial and the traditional banking system, right? So yeah, just my thoughts on it being
very interesting. Yeah. Zhuling, I see you nodding furiously there. I want to get your thoughts as well.
Yeah, because those were really great insights from and Timothy. Totally agree with all those points. I mean, recently I read Ray Dalio's latest book about how to deal the principles to deal with a ever-changing world order. So he actually talked about crisis cycles, right? And historically, the hard money is always basically just gold. So what I think here is also there is a potential scenario that BTC could be considered as a hedge or a new addition to hard money based on certain traits that it has, and also certain traits that it actually gets better than gold, easier to store, it's and also if we start to see all the institutions like even Fidelity has its own custody for Bitcoin. So for me, that's actually a very serious commitment, right? And it's also a recognition of Bitcoin as a asset, right? Because otherwise they wouldn't have thought so hard about how to store it securely. And besides that, I also see that there is a hedge of a generational paradigm shift, right? Because the new generation who are born in the digital era, they are super comfortable with seeing their storage of value in a digital form. That's why people are even the trade in-game purchases, right? They're bragging about how wealthy they are because they just have something that is super virtual. So I think this also kind of hints to crypto as a new form of storage of value for them. And in fact, sometimes we also see that certain institutions are actually pushed by their clients to embrace crypto because their clients either hold it or they want to have it, and they want their bankers to actually do that for them, right? So for me, there is definitely another edge just based on how people perceive storage of value. Yeah, that's pretty much my 2 cents here.
Amazing. I mean, I'm going to have to probably go back and rewatch this whole session because it's hard for me as a host to take all the insights in, but it's definitely a lot that you guys have given out. Now, we're just about out of time, and we've only got a couple of minutes left. So I just wanted to open it up to each of you. Maybe Zhuling, if you can go first, followed by Tim, and then Lionel. Just give a bit of parting advice. What's the one takeaway if everybody forgets everything else that you've said, which hopefully they won't, but what's that one thing that you would love for the audience to take away from this session?
Mm-hmm. Yeah, I would encourage institutions to try out staking because that's a really new type of yield. It could also, actually open up their whole understanding of crypto and come up with very innovative products.
Yeah. So on my end, if there's one takeaway from this session, I would really like participants within the industry, and today we have 3 of us on the line, and to kind of continue to embrace regulation, right? To continue to work with regulators, to come up with meaningful policies and policies that make sense from our perspective and from their perspective, right? And only then, by working with them, by getting regulated, can we really see the next leg of growth of adoption within the crypto space.
On my end, I think testament to what RockX is doing, what Cactus is doing, and what we are doing. We definitely respect regulations. We respect how things should be done. Again, having that idea of business continuity. The ecosystem definitely is here to stay, right? We've gone through quite a number of cycles already. We've been knocked down. We've had dirt thrown in our eyes, but we've always managed to emerge stronger with a clearer purpose and clearer roles and definitions, as well as with more innovation coming in from new market participants, right? So I think that is a very encouraging thing to understand. And there are prim and proper ways to get allocation into various pockets of the digital asset world. There are various infrastructures which have been built, which work fantastically well. Taking the best practices from the traditional finance world and modeling it specific to what's happening in Web3. So I think it's important to always keep that in mind, to know that we are moving as a whole in the right direction.
Absolutely. And we are in a very exciting time. I can't emphasize that enough. We're on the cusp of something great. And I think there is so much innovation that's being built. And each of what you 3 are part of is something that is just, like you say, a testament to this space. So I just want to thank you all for joining us, both to the audience and then Zhuling, Tim, and Lionel for being so gracious as our panelists and providing your insight. And for anyone that is listening, we will have a screen just up after this, which will have the names and roles and companies for all of our panels if you'd like to get in touch with them. But again, thank you and good night or good morning or good afternoon, wherever you are.
Thank you.
Thank you so much.
everyone.
All right.
Yeah.
Thank you, everyone.
Bye bye.
Okay. Bye.